Bitcoin. Are you investing in Bitcoin? Do you know about Bitcoin? All right, Debbie. So in this video, I'm going to talk about why I am not investing in Bitcoin in 2018. I know this is going to turn a lot of you off, but this is just my 2 cents when it comes to building real businesses and investing in income-producing assets. All right, so without further ado, let's jump right on in. I'll tell you exactly why I'm putting all of my attention into things that I can actually control. All right, so let's jump in, get to the anti-Bitcoin good stuff. Here we go. All right, Debbie, so what I'm going to talk about here today is definitely going to turn a lot of you off. I know Bitcoin is the new hot thing on YouTube. I think it's a complete waste of money, in my opinion, and I'm going to talk about why. This is all just based off of real investing principles, and as an online entrepreneur, this is something you have to understand. So right now, the hot thing is Bitcoin. Several years ago, it was silver and gold. And before that, I don't really know what it was before that. Let's just say it was the dot-com bubble. All of this is called speculative investing. So the number one rule of real investing is that you have to first and foremost worry about protecting your initial investment. So let's say you're in it for 10K. The problem is that a lot of people get into it, especially with Bitcoin right now. They're thinking about all the money they're going to make. What you have to put all your attention on is preserving your initial investment. So right now, and here's the deal, people get really emotional when it comes to money, especially right now in the cycle here. Let's go with Bitcoin. This is when everyone has what's called extreme optimism and fear of missing out. So all these beginners are coming on that don't really have the skill set to be investing in this type of investment, and I say that in quotes. So what you have to realize is that there are people that literally spend 10 years of their life, hundreds of thousands of dollars in Ivy League education to learn how to get in here at this point of the phase to milk all the beginners and all the noobs of their money that think that this is just going to keep going on forever. So where I'm going with this is that because there's such potential to lose literally all your investment, you shouldn't be, as an entrepreneur, investing in this type of activity. Now, I know a lot of people are going to counter and say, oh, bro, you don't understand. What about the blockchain? You don't understand blockchain. It's going to be around forever. Look, this is the crap. People have said the same exact words when it came to silver and gold. Now, the other people are going to say is like, oh, well, you don't understand, bro. My friend got in, he bought 4 Bitcoins in 2016, and now he's got $100,000. So here's the thing you have to realize with that. That guy is going to lose that money sooner rather than later. This is like someone who wins $100 million in lottery, and they end up being broke just years later. So here's the deal about money. It takes skill. It takes financial discipline. It takes knowledge in order to learn how to not only preserve your money, but turn it into more money. So when people have these small wins, especially in this phase right here, they start thinking they're an investment wizard. They get a false confidence built up, and let's just say they do win during this hot trend, this Bitcoin thing. Let's just say people win, someone is by luck, just from luck alone wins in this type of investment. Their confidence is going to be falsely built up. So the next time they're going to be looking for the next win and then the next win. And let's just say they even do pull it off and they win 3 times in a row. They're eventually setting themselves up for a huge loss in the future. So because of the way money makes people emotional, it's very tricky. It has a way of playing a lot of tricks on you, especially when you're winning. Confidence, all that comes into play. It can trick you very quickly into thinking that you're like the next god of investing, and you just know because of the month of research that you've done that you know everything there is to know about this type of investment, but it's really your mind playing tricks on you. So what you have to do, in my opinion, is if you want to be successful with doing your own thing, you have to diversify your high-risk money into very stable income-producing assets. So where I'm going with this is that as a business owner, an online business owner, for example, let's say you have a YouTube channel or affiliate sites, or you do like paid advertising with Facebook ads, and you build your list off of that, whatever it is, you do webinar promos. This in and of itself is already a high-risk activity. So the last thing you want to do is take that money that you make. Let's take it, you say you make 100 grand from this high-risk business. The last thing you want to do is take that 100 grand and put it into another high-risk activity like Bitcoin. Why? Because it already takes enough learning and energy and time to win at this type of high-risk activity. You can't risk losing it all and trying to learn another one. You might as well put all your energy in getting better and lowering the risk, so to speak, in this type of business. So the other issue is that because high-risk activity has a huge risk of losing your initial principal, you have to avoid this at all costs once you combine it with, let's just say, an online business. So what I think the best thing to do and people will argue otherwise, is to take your money from your high-risk online business, so let's say you have your YouTube channel, and funnel that into a very stable and safe investment. And I say real investment, something that has some kind of underlying value, whether it be real estate, let's say you have an apartment building or a few single-family homes, whatever it is. You want something that has an underlying value that produces, and this is what's most important, it produces cash flow. All right, so every year you get a dividend, so to speak. So this could be real estate. It could be investing in very safe, stable stocks. And there's a limit to that, obviously, especially in a capitalistic society. Even top companies like Coca-Cola can eventually, potentially, not lead the pack anymore. So let's just go with Coca-Cola, for example. It's not sexy like Bitcoin. Like, you're not going to triple your money overnight. But what you do get from investments like Coca-Cola is you get a stable business that's well fortified. It has a moat around it, and it grows slowly but surely every single year. So yeah, it doesn't give you that 4x return in a month, but you do get a 6 to 10% return per year. And obviously that's not going to be every year, but it is kicking off cash flow that you can use to reinvest. So you have to always be concerned about preserving your principal investment by calculating everything out. You can do that with real business. You can't do that with imaginary value like Bitcoin. Like, for example, this chart. This value right here that people think Bitcoin is worth is all based right now off of what a bunch of beginners think that it's worth. So they're basically betting right now that the value of Bitcoin is going to, in the future, is going to be a lot more than it is right now. And this is just based off what a bunch of beginners think. So there is nothing quantifying this based except for a bunch of emotional decisions. So when you invest instead into stable things like Coca-Cola or a real estate business, you can break down the numbers and know almost with not 100% certainty, but the odds are much higher for success and less risk for losing your initial principal investment. So where I'm going with this is that you have to not be concerned about the growth first. What you have to be concerned about is preservation of your principal investment, first and foremost, most important thing. All right, so there are a few ways to do that. Of course, I just talked about Coca-Cola. Another great way to do it is just investing in yourself. So learning more about money, books, any book to do with money, any book to do investing. Investing in knowledge as far as starting an online business. These are all great ways to lower your risk and build assets up at the same time. So personally, my high risk earning activity has always been online business, things like affiliate marketing, YouTube marketing. If you want to start that, I do have a free guide you can access. It's at deadbeatuniversity.com/guide. So what this guide will teach you is how to create a stable, predictable online business. And of course, there is a little bit of risk initially, but the more you learn, the more that risk becomes lower risk. So this guide is 100% free. This shows you how to start an online affiliate marketing business from scratch. You can get that at deadbeatuniversity.com/guide. So it's everything you know, create a website, doing research, selling products as an affiliate, so you get guaranteed money with each sale that you make. All right, so with all that said, get that there or through the link below in the video description. My name is Stan Brock, the Deadbeat Super Affiliate. Remember, it's all about preserving your initial principal investment. All right, so that final note out of the way. If you enjoyed this video, hit that circle subscribe button to join the Deadbeat Revolution today, and that button will be right here. Also, share this video with your friends. Comment below, like the video, give me that YouTube loving. My name is Stan Brock, the Deadbeat Super Affiliate, and I'll see you Deadbeats later.